For the first time in this entire run, we had a major fake out. And this fake out was the tariff scare, right? So anyone who's calling for top, they have a case. Once you have shitcoin or open interest greater than Bitcoin open interest, you only have a few weeks before you get some kind of major event. And we have high concentration of Bitcoin into the ETFs and the treasury companies. And that's an unprecedented risk. A lot of people who've been with Bitcoin for a long time, they see that and they're selling. Back in the previous bear market, MicroStrategy was important, but not anywhere near as important as it is today. These are risks that didn't exist before, and they're going to happen. It's inevitable. If you don't see the bear case, you are setting yourself up to be trapped. If you're a bear and you just are blind to the bullseye, same. You're setting yourself up to fail. It's inevitable. Archie. Take a look at this chart, right? This is a chart I've had since the bottom of the bear market, and we've been following this along. Me and a big group of students, we followed this along, right? This bull run has been characterized by something very simple. Very short and rapid advances, followed by ranges, and then a scary spring, a scary spike lower and then the range eventually resolves to the upside. This is what happens every single time, right? So let's just go quickly. Even from the peak or bottom, you had FTX collapse, and then a very small range with low volatility. And then you had a spring, which was at the time, some more FUD were coming in at the time, the Genesis, something like that, right? And then that spring took out the FTX lows and immediately recovered. Okay, this was the peak or low of that range. And then you had a rapid advance, meaning it just took a few weeks to move up. Like if you didn't catch that, you didn't get any options to, it just went up, did not let you do anything in those few weeks, right? And then you had another range and lasted a few weeks. And that range had a big spike down. This was the banking collapse at the time. And USDC DPEG on the weekend. I don't know if you recall. And this was a spring that sent to the next range. And it repeated and repeated. Now, this has a bigger range. This was a summer range, right? And then you had a big crash. And then what happened here, Grayscale won their lawsuit, okay, which opened the door to the Bitcoin ETF, okay? We had some news that BlackRock had filed for an ETF right here. BlackRock filed for an ETF. Price pumps, but it was not ready. Retest the lows. Grayscale wins their lawsuit right here. Range is a few more weeks, but this range, after there was a spring locally, you don't see it on this chart, on the Kraken chart, but on the derivative charts, it took the lows. Or on the daily close, there was a daily close below. And then the spring sent us into this rapid advance, pricing in the ETF, right? And then we have another range. This was the ETF launch. Okay, it was a little bit of a sell.
Just one more thing on that leg up. That was also when Trump really firmed to become the next president as well.
Right here?
Yeah. No, sorry. No. That's the year after, isn't it? Sorry,
I wasn't here. No.
Apologies. Yeah,
here you got just pricing in the ETF, and then we had the ETF launch, and then you had the sell the news, and then you had the little spring, which was basically a spring where everyone was like convinced now that this was a sell the news, after a few weeks of downside.
Yeah.
And at that point, we got the most successful ETF launches in the history of ETFs, right? And so markets started to realize that, crap, this is the real deal. And then we had a big move up again, but that big move up, we had some euphoria in shitcoins and in Bitcoin, new all-time highs, and then a big trading range. So I don't need to go on again. I can remember every single candle in Bitcoin's history since 2016, right? I can explain to you what happened every single candle here. This was Iran war escalation and so on and so forth. Then Trump wins the election. Everybody says that this was priced in when, how can you price in an election when the odds were 50-50 before, right? It's not possible. So it was not priced in, and it went up very high. And then this was the Trump inauguration, right? So we had some sell the news here. Trump inauguration right here, okay? So logical to see another trading range established, but this is where we had a change of behavior from the bottom. Okay, so this is very actionable intel. For the first time in this entire run, we had a major fake out. It was not just a spring. You see this wick right here? Could have been the spring. It wasn't. Instead, we had a major fake out. And this fake out was the tariff scare, right? And equities nuked as well and everything. So if you want, you can call this a fake out and then range reclaim. But it was still a change of behavior. And what we are faced with right now is the very first time this entire run that we failed to expand after a range is established, right? So anyone who's calling for top, they have a case. You cannot dismiss the bear case, right? We definitely have a change of behavior.
It does look like it's tapering. The run is tapering, right?
I mean,
because there was quite a consistent line up until that point.
That's right. But not only that, I can see this to my child. I can show this chart to my child and tell him like, point to me what's different. You don't need a fancy analyst to tell you that things are different. Now we have lots of old whale selling. We have lots of FUD of induced. We have a lot of our own problems in Bitcoin that's unrelated to equities. But if you compare this with what happens with gold and equities, right, you're definitely asking yourself some questions. That's normal. But why am I saying all this? Because just a little bit ago, we talked about how we can make bets when we know we have a certain thesis and we can determine where we're wrong, right? And we said, you know what, more than 50% downside is illogical at this point of view. Does not mean it's impossible, but it's illogical. So then I want to position in the smartest way possible. So if price starts to come down, right, as close as possible to this 50%, I'm going to have to be very active if I have a thesis and start making bets, right? Because I'm a risk taker. If I don't take risks, I also don't get to enjoy the rewards, right? No risk, no story. But you know what? Now I mentioned all this to say we have the same thing to the upside. Once we had a change of behavior, okay, I was saying at the end of August, right before September, in here, I was saying this is not the time to be mega bullish. It's the time to be cautious and see what happens. Now, we had many other signals, right? For example, shitcoin open interest was higher than Bitcoin open interest. Now, this is alpha for all of your listeners. And this is alpha I can share widely because it's never going to decay, It's not something secret. Once you have shitcoin OI open interest greater than Bitcoin open interest, you only have a few weeks before you get some kind of major event. It's always like that. It's always been like that, and it always will be like that. And the reason, because it always will be like that, I can share this freely. It's not some kind of secret alpha. It's out in the open. If you'd like, I can explain to you why this is the case. But what I'm trying to explain is that this top, it is a top, local top, or more than that, we don't know yet, but it is a top. This top was entirely easy to call and to position properly. And the few who were positioning properly are the ones you need to be paying attention, not the hindsight people who are going to analyze why we had the crash and what happened on Binance and hyperliquid, auto deleveraging, and so on and so forth. A lot of noise. You can see that this is a simple chart. You could have told your child, something's changed, I have to be cautious. And then you can look and be more granular and look at how much shitcoin was going on. And that is just mechanistically bound to lead to a top.
And so what do we need to see here to give us confirmation one way or the other? Do you have a point, whether it's support or resistance, that you're looking to be broken?
Well, I don't want to share specific levels because that tends to get people wrecked, right? Because then people are just going to follow blindly and start buying on the back of something I'm saying without all the proper context, right? But I would say this: you need to understand that there is a bear case on a high time frame and on low time frames. And it's a bear case for Bitcoin, and there is a bull case. Now, if you don't see the bear case and you're a bull, you are setting yourself up to be trapped. Okay? Sooner or later, you will be trapped. You will lose a lot. It's inevitable. If you're a bear and you just are blind to the bull side, same. You're setting yourself up to fail, right? Because the markets aren't predictable. No market is predictable. That's very, very important to understand. No one can predict the market. You're playing with this mathematical equation, right? And there's a range of possible outcomes. And this range changes. It doesn't stay static, right? So if you don't change and you just are static and stiff, you will get wrecked, okay? It's inevitable. Now, we can talk about some of the risks. We have high concentration of Bitcoin into the ETFs and the treasury companies, MicroStrategy and others. And that's an unprecedented risk that we're facing with Bitcoin, right? A risk of concentration of custody, okay? Now, it's a problem. There's no question about that. It's a problem, not right now, but in the future. And a lot of people who've been with Bitcoin for a long, long, long time, they see that and they're selling. Okay, you can see that. A lot of people have been selling their Bitcoins from a long, long time ago. They're saying basically Bitcoin is not being adopted at a corporate level and it's being adopted by the government and so on and so forth. And what's next for Bitcoin? And you have risks, right? You have definite risks. A lot of money and power is being wielded into Bitcoin that wasn't the case before, right? That's a certain risk. And we have other risks of the corporate buying, like MicroStrategy, for example. His average is 74, right? So his average is in here, right? 74,000. As his average is in here. So it is bound to happen, right? And he holds an enormous amount of Bitcoin. It's bound to happen that the Bitcoin price will meet MicroStrategy's average. Do you understand that?
Sure.
It's inevitable. It's mathematical, okay? Whether that happens at a higher price or whether that happens now, with the price being 74, right? It's here. The price is here. This is MicroStrategy's average, right? Something like that. So whether price comes down to here now, or whether we have further upside and then this keeps going up, right? Because he will keep buying. And then we meet the price. That's another question. But what is inevitable is that this price point will be met. And then what do you think? How do you think the market will respond when that happens?
Well, we saw that in the last bull market, or in the bear market, where, strategy, as it was known back then, was MicroStrategy. It did trade at below the market value of its Bitcoin.
That's right,
if I recall correctly.
Absolutely.
But there's no margin call attached to any of their debt.
No, there's none. You're right, and I don't think he's at risk of liquidation. That's not my point. But my question is not this.
Sure.
You need to think second order thinking, right? You need to think how other market participants are going to react. Back in the previous bear market, MicroStrategy was important, but not anywhere near as important as it is today. Because they kept buying and they bought a lot, okay? And MicroStrategy showed that he's not selling, but he's not alone. Okay, it's a company, it's a public company. Also, what if MicroStrategy has something happen to him? Like, what if he gets into an accident? I don't want that to happen, obviously, but us, risk taker, we have to think of everything. So these are risks that didn't exist before, and they're going to happen. They're going to materialize. Question is whether it materializes now or in the future, but they will materialize. It's inevitable. Okay, so that's something to think about if you're holding Bitcoin. What do you think happened? Tell me, what do you think happens when, not if, but when, Bitcoin trades at or below MicroStrategy's average price, and MicroStrategy holds, how much do they hold right now? Like 10% of the Bitcoin supply? No, 1%.
No,
1%, right? 1 or 2%.
Around 1%, yeah. Well, we saw what happens. I mean, you know, when rumor and innuendo is pushed out through various media channels. For example, in the last cycle in the bear market, we saw the persistent story of MicroStrategy being margin called when it was obvious, documented, refuted numerous times that there is no margin call. And but the story just, you know, when there's fear in the market, it's really easy to push FUD articles fueled by FUD, and there are lots of people on Twitter who are ill-informed idiots harvesting attention. And so that happened. But in this instance, what we now have is we have an expanded ecosystem with much weaker players. And we don't know how they're going to hold up. I'm pretty confident that Michael Saylor's company is going to be just fine. I'm not so confident about numbers 4, 5, 6 all the way until 185 because there are a lot of these Bitcoin corporate treasury companies and corporate holders of Bitcoin as well. I'm not so convinced. And so what I expect to happen is a lot of these listed entities will face pressure through their share price. If you're going to go up because of what happens with Bitcoin, then you're going to go down with what happens with Bitcoin as well. And so I would expect that there'd be heightened attention on those companies and quite a lot of stories planted in the media and short positions taken against them. And so that's going to put a lot of pressure on them. And it remains to be seen how they're going to hold up and if they're capable of maintaining the conviction that Saylor did and whether or not their balance sheets and their financial positions can support that conviction.
Let me ask you a question. So I said 10%, but I think the ETFs, they hold 10% of the supply. Am I correct?
No, not anywhere close to 10%. So the biggest ETF is BlackRock's, which is very close to Saylor's. I think they still hold more.
Okay.
And there are a bunch of others that are much smaller but still significant. So it doesn't come close to 10%. But maybe the overall sort of institutional corporate holding might come close to 10%. I don't know.
Yeah, I think this probably something like that. Yeah. So Michael Saylor is probably near 1%, maybe a little more. BlackRock's probably something similar. And if you take it all together, you probably have concentration of custody, something like 10%. And then you have the exchanges. Obviously, that's a different story.